You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. Today, I wanted to go a little more in depth on term insurance. I know I touch on it here and there, and I've spoken about it before and share when it makes sense and go into some of the pros and cons, downsides, upsides of term insurance in general. I just wanted to get into some more detail and more depth on both the downsides and the upsides of term insurance, just to help your mind think a little more broadly and to shed some more light on this product. So I'm going to go ahead and start with downsides for my part one series here of term insurance. The first thing I think of when I'm talking about term and why it may not be a great fit or a good plan for the long run is because it is likely not to be there when you need it. Term insurance commonly pays only about 1% of the time because they are giving you the coverage because they think you're going to outlive it. If they don't think you're going to outlive it, they decline you. You don't end up with the coverage. Or if you're getting up in years, then you may be too old to acquire as much coverage as you would like. They don't expect for you to have term insurance in place at your time of death. Term insurance is more of the cash cow for the life insurance industry. So you might plan for it. I mean, of course, a lot of people use it or expect it to be there or want to have that in place, that comfort when their kids are young. And for sure, you should have it then, should have something then. And if that's all you can afford, okay. But oftentimes when you actually pass away, the coverage is no longer in force because the term period is over. And when I'm thinking about my life insurance, I most definitely want it to be in force when I graduate, when I pass away. Another downside to the coverage is that it brings oftentimes a sense of comfort and security, which may be okay in your younger years with young children. You're just thinking about protecting them, and it's good to have something. But also, while you're feeling comfortable and secure with your term insurance, your cost of insurance is going up as you age. Maybe you think, well, maybe I will get some whole life insurance, something permanent. And the longer you wait, the more costly that will be, and the less that you might be able to structure it for cash efficient growth. You may not be able to put as much money into the paid up additions rider the older that you get, so it'll be a little less efficient. So just the cost is going up. And in addition, your insurability might be going away. A lot of people will say, well, I'm just going to renew my term when it expires. When this 20-year term policy is up, if I still want term coverage, I will reapply. And that is fine. You absolutely can do that. However, sometimes you're uninsurable now from just life, what's happened in life, what kind of, depending on your health issues that you may have or be dealing with, and how well you're taking care of those health issues. Sometimes you've had a major illness that could cause you to be uninsurable for a period of time, or a disease or something that's happened that you may never be insurable again. And so there's that risk. Also, if you have a few different health conditions you're dealing with and you're not taking care of them very well, that can give you a lower health rating. Underwriters often do look at how well you're taking care of yourself. Are you exercising? Are you taking the medication that the doctor told you to for high blood pressure or high cholesterol? Or at least what are you doing for that? And have they seen improvement over time? Or at least are you addressing it? But regardless of that and how your health is doing, even if you maintain the same health rating or have a slightly better health rating 20 years out when you may want to apply for another term life insurance policy, the price is going to be higher because you're older, and it may prohibit you from being able to get the amount of coverage that you want, or you may just decide, oh, I just don't want to spend that much money. But if you've been building up a whole life policy all along the way, then it's kind of cool. You just have a pool of cash that you can access. You can see the growth of your policy. You have a growing death benefit and you have permanent coverage. So that's why I at least like to have some amount of permanent coverage, even for those who aren't looking into infinite banking or any of that. If they're just looking for life insurance, I do think it's a good idea to have some amount of permanent coverage, because I haven't met a person yet who reached those retirement years or the years that their policy is expiring and thought, hey, I don't need this coverage anymore. Or I've never met a spouse that says, yeah, I don't care if you have life insurance to protect the family anymore, or even just the spouses, because that death benefit oftentimes becomes a boost or a help in your surviving spouse's retirement. In addition, waiting and expecting to reapply for term insurance when your policy expires, maybe you're in your early 60s when that policy will expire, you never know what's going to happen. I have a story of a good friend of mine whose father-in-law had a life insurance policy that expired. He was in his early 60s. He was very fit, very healthy. He was working out all the time. For sure, he would have envisioned being able to get more coverage, and anybody around him would have thought, yeah, he would be able to get life insurance coverage and probably the best health rating because he was really taking care of himself. But then he passed away, and he had just lapsed his term insurance coverage. It was less than a year, and he was planning to get it done, and he just simply didn't get it done. And then he unexpectedly passed away, leaving his wife in a predicament. She had to get a roommate to help her with the mortgage. And, they did have assets. They did have things that probably he thought, oh, that'll take care of my family when I don't need this term insurance anymore. But he meant to get that coverage locked in again, didn't do it. And now the wife was struggling financially. He could have left her in a better position and financially secure for her retirement. Another downside of term policies or only having a term policy is that certain companies don't allow you to convert that term policy into a great product or even their best products. So there may be a particular product that the term policy that you have can be converted to. And again, that may not be their best vehicle or the best vehicle for you and your needs. You are maybe restricted into what you can convert to. That restriction isn't great. And so that's why when I'm talking to clients who have existing term, oftentimes it makes sense for them to move that term, if they are still insurable, to the company that we plan to build banking policies with or grow a banking system. That way we are sure that they can convert that term into a great permanent policy, to a whole life policy, and they can use it to grow their banking system rather than having that coverage being trapped at another company and we don't know what we can convert it to or how great of a product that is. Another thing is that I've never seen a term insurance policy that comes with a great rider for critical and chronic illness. Of course, there may be some out there. I don't know every single company's products, but oftentimes term insurance does come with a rider for terminal illness. So if you were to become terminally ill, and different companies have different rules, maybe the doctor says you're terminally ill for 1 year and you can access the rider, or 2 years and then you can access the rider. And that's a doctor saying that they don't expect you to live beyond that time frame. Then you can access a portion of that death benefit. And different companies have different amounts that you can access. And that is a good feature, but they don't have the ones that I've seen, the rider where you can also access a portion of the death benefit for a critical illness or a chronic illness. So if you have a major heart attack or something like that, you wouldn't be able to access the death benefit. Or if you have a long-term care trigger where you can't perform 2 of the 6 activities of daily living, then you wouldn't be able to access your death benefit in your life insurance. So that's one of the features that I think is really cool, an added benefit that does not come with term policies that I've seen. So those are the downsides I wanted to share with you today. Of course, if you've been listening to my podcast for a while, or if you've heard all the episodes, you do know that I definitely do think there is a place for term insurance. So I think there's some positives too. I will be sharing those positives and focusing in on that next time. If you would like to connect, partner and work with me as your advisor and help you figure out what is the best strategy for you, what is the best coverage for you, how can I help you with infinite banking and your understanding of infinite banking, and just help you to create a plan, please reach out. I would love to meet you. You can reach me at Valerie@alphaomegawealth.com. Thank you so much again for being here. I appreciate you listening in, and I will talk to you next time. Take care.
This is thepodcastfactory.com.